Welcome to Java, and thank you kindly for joining. It is September 19th, 2025. Tis also Friday, heading into the weekend. Now, as we head into this weekend, it is triple wedging today, meaning over $5 trillion worth of derivatives are expiring at the end of the trade day today, so promises to be volatile and a bit more interesting than the past day or so. So, with this, I just want to take a quick moment to thank all of you who do support this channel, not just by watching it, but also liking the video if you do indeed like the material that I bring out for you, as well as the comments. Thank you all so much. Some really good stuff in here. So, the markets definitely in a bubble. Pretty much everybody agrees on this. But the question now is, does this bubble have legs? Meaning it's going to continue for some time. So let's take a look at what's going on in the market as far as this morning. In short, I don't think it's going to continue on for long. We are definitely in gray territory. So with this at 62, had a bit of a jump in the markets. This is since the rate cuts from the Fed. That's easy money, saying they're going to be pumping the economy in several directions, not just directly into the stock market, but also taking over corporations such as Intel. So with this, we've got the 10-year yield did have significant movement overnight. It's at 4.128, up 0.1 overnight, which is a significant increase for the debt market. Sell-off in bonds moving into the stocks. With this, the surprising factor is that the relative strength of the dollar also went up. This normally does not happen, but this is relative strength to other currencies because there's quite a bit going on. We'll talk a little bit about that. Now, Bitcoin cryptocurrencies under slight pressure. Bitcoin is still above 116,000. The larger ones that were a little bit of a surprise is XRP and Dogecoin, and they are the surprise because they are among the largest movers down. At the same time, they did just have their ETFs came out and started trading. So normally they go up on that. So we've got the United States right now. We're looking a bit green for the market open. Volatility down slightly. I do not expect that to continue through the day. Now, gold already increasing again. So was that the buying opportunity? Very well could have been. Longer term, still bullish on gold. We've got oil down a bit. It's still above 62, though, 62.88. So at this level, it's still got more room to drop. It's in a consolidation phase, but we're watching this for a kind of an indicator as far as demand. Now, the futures are also saying that there's room to move up this bubble a little bit more, moving Dow weak to flat. So silver is right at an interesting point, could run and continue. So about 42.5. We've got all of these commodities really telling us that there is a bit of instability forward, and investors are looking for hedges, not just in derivatives, but also real assets, precious metals, and the likes going forward. So our daily driver still is unemployment. We are watching for signs of this across several factors. First is in building construction, because from there it filters out. The great financial crisis, 2008, this is where a lot of the employment, if you will, was destroyed, and that kind of rippled out into the economy. So today is triple witching. This will increase the volume and volatility, especially in the final hour of trading today. It is over $5 trillion, so it's absolutely significant. Uh, Middle of the day, not so many trades. Normally, what happens is a float up the first hour of the stock market or so, gets a bit stronger, and as this happens toward the end of the day, volatility increases, a lot more trading going on, but in general, a sell-off toward the end of the day into the weekend. So caution if you're trading on that. Now, we've got the quote-unquote government shutdown looming. This is akin to a broken record because this happens every single time We know they're going to raise the debt ceiling again. It's almost not even worth mentioning. Now we've got TikTok in trade. There is an expected call between President Trump and President Xi. Now, Xi has not been buying soybeans. They've shifted to purchasing from Brazil. So this is hurting agricultural sector of America. They're also talking about TikTok and a few other things. So this could be a mover in the markets a little bit later today. Now, something very interesting I wanted to bring up is Bank of Japan again. Now, they're not really allowed. Now, and I say this because this is not in the headlines, but behind the scenes, they're quite restricted from being able to sell off US treasuries in order to repatriate. They are going to be labeled a currency manipulator if they do, which is quite bad in the global trading sector. So, what they're doing instead, they have announced a plan to sell off their ETFs and the rights, which is real estate investment trusts. Now, this is over the next 100 years, but this is a major decision to trim off their balance sheet. And this has created a little bit of strength in the yen this morning. So they are attempting to bolster the yen. They've had quite a bit of instability of late between the inflation and the issues with the currency. So this is an alternate way that they've been doing this, but this has created turmoil and hit to their stock market in short. Now, the smart thing that he is doing is looking forward to Christmas sales and looking at early numbers for not just their sector, but the United States, as they are the largest consumer in the world, because that is the forward indicator for their exports to the United States, and in short, to see how they can survive through this winter. So, calendar today, really not anything too 30. We hear from Mary Daly's speech, but we're watching more of the timing of those trades for that triple witching. Now, another forward-looking indicator that we keep an eye on is shipping. Shanghai container freight rates are falling, so shipping stocks under pressure. Now, the interesting part of this is FedEx, which we'll talk about in just a moment. We also had Peter Thiel's bullish. Now, this is a cryptocurrency exchange surging by 20% after a green light from US crypto exchange rollout. So, got the green light to go forward bullish. Is going to be a larger exchange incorporating multiple things, not just their own token, of course. But this is, in short, looking at replacing a good sector of banking. And being that he is the one backing this, this has a lot of run that it could do. Now, I want to go back a little bit to some individuals that are going to be moving today. One point about the Bank of Japan moving their equities markets. I'd also like to take a look at the largest equities derivatives market now is not the United States. In an ironic twist, it is now India. And with India, they've got a lot of unwinding to do. So we've got to watch an eye on the other side of this now to see who has the most leverage to, in short, break these markets and movers that would not be expected. Kind of keeping an eye on things and to see what could possibly be the next black swan. We won't know, we won't see it, but keep kind of an eye open on what's going on. Now, FedEx also is a look ahead. They're a different sector of shipping. However, they were on the positive side this morning, so their stock is on the way up. They were profitable. They've done a lot of restructuring lately, so I attribute a lot of this to that within the corporation. Their earnings were good, but their look ahead is still positive. So that is boom to the other side. Now, Lennar is home builders, United States. They dropped on lower orders, as well as they have also been giving out larger incentives in order to get buyers into the new housing market, because they have not been able to sell at the price points that they thought they would originally be able to get during the boom that they purchased all of these. Now, this is a lagging industry because they have to purchase ahead of time and it takes several months, not just with building, but also the permitting structure. So they're down a bit and looking to drop off their inventory. We've got Daimler and General Dynamics. They are going to expand their military agreement. So this, yes, vehicle company, but this is what is going to strengthen them going forward. So auto industry is in dire straits at the moment. So again, like everybody else, they're looking at public sector or military contracts, which is taxpayer dollars, in order to bolster them. They're just finding different ways to do this because the United States economy is not in good shape. The inflation is out of control and people are having a difficult time with this. We're watching a very definite split. So, talk about this in a moment. Citi downgraded Intel after the NVIDIA partnership. They also now are partially owned by the United States government. So, again, they got bolstered, went a little bit too far, and they're on public money as well through a different venue. So, who is left that can actually spend in this economy? Look to American Express. They're betting big on premium segment. What does this mean? We are in, I've spoken about this before, they call it K-shaped economy. But what that means is that those that have the wealth are getting wealthier, and those that do not are languishing at a faster pace. So we've got a two-tier system now, split economy, meaning those that have, those that do not. So moving on, we are watching the largest sector moving is in the financials and payment systems. So this warning, the Bitcoin traders should pay attention to Japan, as a top economist is warning of a debt implosion. We've been talking about this for a long time. There is a massive disruption coming in the financial sector, and all of this is going to include, as we know, cryptocurrency, stablecoins. They're putting all of the regulations in now because the shift is about to happen. Now, I want to bring this up. I thought this was interesting. You can copy this off if you would like to see. This is actually an interactive map. It is done by Moody's, and they are watching all of the sectors, of course, for the economy. So there are little key here. Now, the interesting thing is Canada currently in recession, United States and Mexico at risk, and you can see from here. But as you hover over these in the interactive you can bring up, it does expand on the details, and this is direct from Moody's. So Trump is saying that the United States is working to take back Bagram Air Base from the Taliban. Now, we're going to move more into war, military spending. We're going to increase that debt ceiling for the government. They're talking about the shutdown, but this is going to always be approved for the military because we need the security, not just there, but also in these times. And this will allow the inflating of the stock market through, as I was just explaining, those individual corporations. Now, he is saying that we need this key point back because of the proximity to China. So just keeping an eye on that as well. Now, how does all of this happen? Now, World Bank, which is really United States funded, is looking to boost their firepower by offloading loan risk to investors. So, how do you like that? If you've got investors that are getting you moving forward and then you're making them take all of the risk, well, what you have to do with that is you have to raise your rates and make it worth their while. So this is going to be very interesting going forward as far as the interest rates. The more risk you push onto others, you have to pay. Just like the 10-year yield, higher the risk, the yield has to go higher. And that is part of what is driving these markets. So we are heading into a weekend. I wish you all a wonderful trading day if you're trading. If not, I wish you a wonderful, peaceful weekend. It's going to be a very interesting week. I will be out for the greater portion of it for the conference in the midweek, but I will see you prior to that. So until I see you again, my friends, resist.